Good morning and welcome to the investor webinar for TMK Energy Limited, a company focused on the responsible development of Mongolia's significant gas resources. I'm Jane Morgan and today I'm joined by TMK's CEO, Brendan Statt.
Thanks very much, Jane, and thank you everybody for joining and your interest in TMK and our progress on the Gavantes 35 coal seam gas project in Mongolia. So I intend to go through the presentation today relatively quickly, but I encourage questions, Q&A sessions at the end of the session. So please submit any questions, and I'll be pleased to answer them as best as I can. So TMK's focus, and 100% focus really this year, is on the development of the Gavantes 35 coal seam gas project in the South Gobi Basin of Mongolia. It's an exciting time for the company as we go through some really significant development milestones with the upcoming pilot well program and subsequently the exploration program. But just onto the investment highlights. So these are the key attributes of the project, and I intend to go through these in more detail through the presentation. But just in summary, we think we've discovered a world-class coal seam gas project in the South Gobi Basin of Mongolia, and the right time and in the right place. Being located in the South Gobi with high energy demands and not access to reliable power, but also on the doorstep of China, which is and by doorstep I mean 20 kilometres from China, and China represents the world's largest energy market with a particular appetite for gas. We say it's a world-class coal seam gas project based on the extensive drilling that's been done there over the last 15 years for coal exploration, and more recently the work we did last year in drilling the maiden coal seam gas exploration project, which delivered outstanding results. And that information went into a maiden contingent resource estimate, which was produced last year, which delivered 1.2 trillion cubic feet of a 2C contingent gas resource, which is an incredible result and really talks to the quality and the scale of the project. I'll work through these highlights as we go through the presentation. So just quickly on the corporate front, with the shares on issue, I guess key points here are that board and management have significant skin in the game, holding about 50% of the shares on issue. The top 20 has about 65-70% of the shares on issue. And the other interesting thing about the shares is about 50% of the shares are held by Mongolian nationals. So I think that's a good thing to have significant interest in the project, the Mongolian project from within Mongolia. We've got about $7.5 million in the bank at the moment, and that will see us through the current work program which is planned and take us through at least 12 months, and that takes us through some real development milestones in the project. So yeah, we're currently in a good position, and I'll talk to those development milestones and the upcoming work program through the presentation. So just onto the management team and the board of directors. And I guess with both the board and the management team, what we have is a diverse range of skills and experience, but the right mix for developing this project in Mongolia. And I guess the most obvious one is Australian and Mongolian nationals at both the board level and management level. So I think that's the right mix for this project and for the stage we're at in the project. Just on regards to changes on the board, recently Stuart Baker stepped off the board due to other work commitments, and Professor John Warburton joined the board. So that's been the recent changes to the board, and John brings he's a geoscientist with many decades of experience in oil and gas all around the world, but also brings experience as a director of unconventional gas companies, namely Cenex, which had a coal seam gas project in Queensland, and also Empire Oil and Gas. So brings a great background and to the board, and additional value to the company. And I'm saying those nice things about John because he's just sitting over there, so it'll be nice. But yeah, that's the board and management team, and I think the board and management team have, over the last year and a bit, have really demonstrated a track record of moving this project forward and delivering value for TMK shareholders. So just onto the highlights of the actual project itself. So I guess the key points here are the size of the project, and that really talks to geographically. It's a very large area of the South Gobi Basin. It basically covers the western half of the South Gobi Basin, which is where half the coal that's mined in Mongolia that's exported to China comes out of. So 8,500 square kilometres, so very large, but it also talks to the sizes in the gas resource. There's a risked prospective resource of 5.3 trillion cubic feet of gas, and then a contingent resource, 2C number of 1.2 TCF. So a multi-TCF project, which is very large. The other key aspect is the location. So as you can see on the map, it's located in the very southern end of Mongolia. 20 kilometers from the border with China, and also importantly, 20 kilometers, about 300 kilometers from the existing gas network in northern China. So for a big gas project, you need a big market, and yes, location of the project's a strategic advantage compared to the other gas supplies to China, which come from Central Asia or Myanmar, or include coal seam gas, which comes out of Queensland, is piped, liquefied, and taken on ships. So location's a key advantage as well. So I just put this slide in the presentation just to give a bit of context and background about how we got to where we are today. So the project kicked off in January 2019, but the license, the exploration license and the production sharing contract was awarded in late September 2021. TMK acquired the project in February 2022. And I guess from that point of being awarded the or TMK acquiring the project in less than a year and a half, made significant progress on the evaluation of the project. Last year, we completed the maiden drilling program, which I'll talk about in more detail in a minute. But basically, yeah, terrific results, and that led to the maiden contingent resource in November 2022. Earlier this year, or in April last year, we commenced the pilot well drilling program, and I'll talk about that in more detail. But basically, we finished the drilling component of that program. But I think it's just the point of this is really that we've been able to significantly move the project forward in the last less than 18 months, from going from drilling the first exploration well to now being in a position where we've completed 3 pilot wells. So that's really fast tracking a coal seam gas project, and that's a significant advantage of this project, is that we're able to move the project forward quickly, and that's based on the historical data set which is available to us from the existing coal mines and coal exploration that's been done. But it also talks to the geology. The geology supports moving quick because the project supports it. So just for reference, I just put in the exploration results from last year. So we drilled the 7 wells, and the key takeaway here is that all 7 wells were very successful in defining very thick coal with high gas contents, and the gas content being methane and permeability in the upper sea, principally. And so in terms of results from an exploration program for coal seam gas, that's about as good as you could hope for, I think. And that work led into, on the next slide, the resource estimate, which was completed independently by Netherlands Sewell & Associates, and delivered independently completed by Netherlands Sewell & Associates, which are some of the most experienced and well-regarded independent certifiers around the world. And yeah, that information informed a 1.2 trillion cubic feet 2C estimate, which is an incredibly large number, considering it's based on 7 drill holes, which was at a cost of 1.5 million bucks. So that's a terrific bang for buck. But I guess the other key point here is that that's not all the project is. That 1.2 trillion cubic feet contingent resource is only from a 60 square kilometre area, which is less than 1% of the total project area. And so the focus really is exploring piece by piece or step by step, exploring one area and then taking it through to the next stage, which talks to the pilot well program that we're completing basically in the middle of Narrowsukai, where we completed the exploration program last year. Now we're taking that to the pilot well stage. And then later this year, we'll be stepping out to a new area, completing the exploration, and then on success, targeting pilot well program in that area in subsequent years. So it's really a rinse and repeat model, breaking it down by area. And just for scale, 1.2 TCF of gas, at a nominal rate of $10 gigajoule, talks to about $13 billion worth of gas. So 1.2 TCF is a gas project in itself. But yeah, as I mentioned, there's more potential within the project area. And I mentioned at the very start that we think we've got a world-class coal seam gas project, and this slide really just tries to highlight that. But based on the results that we've identified, the unique quality of this project is really the resource density, or how much gas is in the ground per unit area. And that's a function of the amount of coal, the thickness of the coal, and then how much gas is in that coal. And so the Gavantes project, as I've tried to highlight, is very, very thick coal, thicker than any coal seam gas project that I'm aware of. And then with and it's all gassy coal. So that leads to very high resource density or gas per unit area. And the chart on the left just tries to outline that against comparing it with three of the most well-known developed coal seam gas fields in the world, being the Powder River Basin in the US, Surat Basin in Queensland, and the Bowen Basin in Queensland. And the comparison there is that those well-developed fields operate at about 4 to 6 billion cubic feet per square kilometre in terms of resource density. And there we have Gavantes up in the top right corner, operating at about 33 billion cubic feet per square kilometre. So materially higher resource density than some of these well-known and well-developed coal seam gas fields around the world. So very encouraging results from a geology perspective. So that's all background and talking about how we got to where we are today. And now I'll focus on plan going forward. So this year we have 3 key strategic focuses. The first one being the pilot well program. And the idea behind the pilot well program is really basically in the center of Narran-Sukhite, where we did the drilling last year. I identified that huge gas resource in the ground. The key objectives really from the pilot well program are to flow gas to surface, which is much more tangible for people when you see gas coming to the surface. It's to confirm the production profiles, which will inform what the development plan for the area will look like and demonstrate the commerciality aspects of the project. I'll talk in more detail about the pilot well program in a minute. The second focus for this year is the exploration program, which is similar to the work we completed last year in identifying an area and drilling it out and proving up contingent resources in that area. And the idea here is really we'll be stepping about 30 kilometres to the east and drilling up another area around the size of 120 square kilometres and trying to prove up contingent resources based on if the drilling is successful. And I guess that's also the aim is also to demonstrate the scale that because there's been a lot of work done in the South Gobi Basin in terms of coal exploration. The coal's defined along strike over vast distances, and what we want to demonstrate is that, this rinse and repeat model where we can focus on an area for exploration 1 year, then subsequently do a pilot well program, and while we explore for the next area, and continually step out and grow that resource and reserve base. And the third strategic focus is really early commercialisation. So that talks to using gas from the pilot well program. Putting it through reciprocating engines and generating electricity to support the local area, particularly one of our partners there in one of the mining operators who've been supporting the pilot well program, providing reliable and cost-effective power to that mining operation and the local area. Numerous benefits, but I guess one benefit is early stage revenue for the project. And to that end, we have an existing offtake agreement with MAC for any power that's produced from the pilot well program. So they're really the key focuses for this year. There's a bit of a timeline on the right, and so far everything's going to plan. The pilot well drilling. Well, maybe I'll talk to that on the next slide. I think we've got a short video or animation, which hopefully just shows what the drilling program looks like, and hopefully outlines it better than how I can describe it. So we'll just watch this quick animation. okay, there's a bit more that goes into it, but that's the basic principle of the pilot well program. And so just on the pilot well program in detail. So what we've recently completed is we've completed the drilling of 3 pilot wells. So there's 3 production wells which are located, as you can see in the map, they're basically in the centre of the Narrabeen area, and they're located. The 3 wells are placed about 250 metres apart. And I'm pleased to report that the drilling's been recently completed as of early this week, and all 3 wells have been drilled without incident and on time and on budget, which I think is a real credit to the team on site. Coal seam gas exploration production wells are relatively new in Mongolia, but we've been able to put these 3 wells in without incident, on time and on budget. And the other important thing, well, the most important thing, is that all the wells have met all the technical objectives. So all 3 wells intersected the target upper coal seam, and intersected between 60 and 70 metres of coal in the production interval. So, as I mentioned earlier, that's thicker than any coal seam gas project that I'm aware of. So yeah, great that we've finished the first stage of the pilot well program, which is drilling the wells. Just looking forward to the forward plan with the pilot well program. Now we move on to completing the surface facilities, which includes the water holding pond, the pipelines, the metering skids and the flare lines, with a view to commissioning the wells in early July. And that talks to really commencing the 6 months production test mid-July and running it through July through to December. And so what we expect from that pilot or that pilot well or that pilot stage is really, initially we expect to get high water rates and low gas, and then over time we expect the water rates to drop, and over the 6 months we expect the gas production rates to increase, which is sort of typical of a coal seam gas project. And in saying that, we do expect early gas breakthrough within a month or 2 of turning on the wells and dewatering the wells, which depressurizes the reservoir. We do expect early gas breakthrough, but then we expect to see that gas rate picking up month on month out. So, and in actual fact, the peak production rates might not be realised till 12 months after commissioning the wells, which again is typical of a coal seam gas project. But I guess we're confident with what the gas production rates are going to look like, because we've intersected the 60 metres of gas, which is an awful lot of gas in the production interval, but also because that coal is very gassy and it's at high saturation. So so we're very much looking forward to the production testing and seeing those flow rates come in. So just onto the second focus area for this year is the exploration program. So we've just got a picture there which shows the Narrabeen field, which is where we explored last year and where we're doing the pilot well this year. But then we've got the green polygon there showing basically a long strike, the same coal measures. We'll be looking to drill 8 exploration cores, and hopefully getting more encouraging results, which will then set us up for the subsequent year in looking at doing pilot well program in that Enken Uz field. Yeah, so the current plan is 8 exploration cores and 50 kilometres of 2D seismic, but there is an option to expand that program, subject to I guess results and how things are looking. So yeah, as I mentioned earlier, the objectives of the exploration program is really to demonstrate the scale and show that the project's more than just a narrow sulfide field, and grow that resource estimate. And yeah, really take the project, identify new areas to take them through the development milestones. There's still a lot of other areas to explore within the project tenement, as you can see. So in one sense, we're only getting started. But as I said, we're sort of trying to break it down area by area and take one area through the development stages while kicking off the development stage in other areas. So developing that pipeline of exploration and development. And so I guess the third focus area was really commercialising the project, any gas that's produced. And as I mentioned, any gas produced from this pilot well, we're looking to put through reciprocating engines, generate power and sell that power to the local area. But just thinking more broadly in the midterm, or looking a bit further out, there's a real opportunity for natural gas in Mongolia to have a real impact on the local energy market. Mongolia got significant issues around energy independence and reliability, and so we see a huge opportunity in Mongolia and in particular in the South Gobi province where we're operating, to be a reliable supplier of energy going forward. And that's really the midterm, that's the target market. But the bigger picture is, a multi-TCF project really needs a really large market, and we see, the real opportunity here is supplying gas into China via that existing infrastructure located in northern China. The Chinese energy markets are huge, particular appetite for gas, and so the real advantage or real opportunity for this project to tap into that insatiable market. And so that's really the long-term goal here is accessing that market. But step by step, first by supporting the local area, secondly, domestic opportunities, and thirdly, a much larger opportunity in supplying gas to China. And just in general, in terms of operating in Mongolia, resources and developing these projects is really the lifeblood of the Mongolian economy, and they need the expertise and the investment from foreign investment to really develop these projects and grow the local economy. And there's a number of points there on Mongolia, but I guess I've been working there for 12 years, and I obviously think it's a great place to work, and real opportunities there. And in talking to that opportunity with China, in Mongolia in general, there's a resource-focused economy. Mining's the big game in town, and I think 90% of those commodities are exported to China. So developing a resource project in Mongolia and exporting it to China is not new ground. There's an existing trade relationship there. But we're at the early stages of coal seam gas, and I think that's why we've got such a large project with a huge prospectivity, and it talks to that underexplored brains. And just the current development framework, I just want to touch on our two partners. So TMK has a 67% interest in the Gavantes project, and Talon Energy is our joint venture partner, and they've got a 33%. TMK is the operator of the project. And I guess the other relationship or partner we have is the Mongolian government by way of the production sharing contract, which is really the agreement under which we can explore for and develop the project. And the key terms there are the fiscal terms being a 5.5% royalty to Mongolian government, and also a profit share of the cost recovery. And those fiscal terms are pretty competitive and pretty attractive in terms of developing the project. So I'm sorry, I sort of sped up and tried to get through the presentation as quick as I could, so we could get to the Q&A section. If there's any areas people would like me to focus in on, I'm more than happy to answer any questions.
Wonderful. Thank you, Brendan, for the great presentation. And again, attendees can use the Q&A function, which can be found at the bottom of your screen. I'll jump into it. So if the gas is sold into China, how would potential production costs in Mongolia compare to gas produced domestically in China?
Well, I guess there's not a lot of transparency on costs of producing gas in China, but I think we're not trying to replace domestically sourced gas in China. We're really trying to replace or add to the import of gas into China. So currently, China gets most of its gas, or it gets its pipeline gas from Turkmenistan, offshore Myanmar and Russia. And so there's a bit of a view onto the prices that they get for that pipeline gas. But there's a shortfall in gas in China, and that's met with LNG imports, which includes coal seam gas, which comes out of Queensland. So I think our advantage there is in replacing some of that high-cost LNG that lands into China, and there's a number of advantages here. We think we can produce gas to the wellhead much cheaper than Queensland, and that's based on thicker coal, high gas contents, and also lower costs operating in Mongolia. So we think we can deliver it, get the gas to the wellhead cheaper than coal seam gas projects in Queensland. But then the real advantage is cost of delivery. Gas is a bulk commodity, and bulk commodities, it's about cost of delivery. And for gas coming out of Queensland, it's 400-kilometre pipeline to get to Gladstone. Liquefied, put on a ship, taken to China, and then regasified, and that's a very expensive process. Whereas, basically, from the project, we could say it's a 400-kilometre to get into the existing gas infrastructure. So, I think that's our competitive edge. One, we'll be able to get it to the wellhead cheaper, and then the cost of delivery to that market is significantly cheaper, and it's also significantly cheaper than those existing suppliers, which are 3,000-kilometre pipeline to Turkmenistan and where they get the gas out of Siberia. So 400 kilometres, it's a real advantage for the project.
Thanks, Brendan. So with the exploration drilling in the second half of the year, can you please quantify the size of the resource that the company is targeting?
Yeah, it's always tough to put a number on before you do the exploration, because it is subject to results. But I will say that area to the east, it's an area called Encanos. There's a number of coal fields that have been defined there over the last 15 years, including exploration that I did there 10 years ago. So we've got a pretty good geological understanding of the coal seams. I will say that they're thinner than what we see at Narrasukai, but they're still thick in terms of a global context for coal seam gas. But again, we're looking to add say 200 to 300 BCF of 2C resources, which is actually what we said last year when it came to Narrasukai, and we managed to over deliver. But yeah, and I think something in that order would be a great result.
Thanks, Brendan. For one, it's probably new to the oil and gas space. So if the resource proves to be viable, what would be the development time to move the project into production?
So I guess there's three markets where we're chasing. There's that local market, which talks to there's 5 operating coal mines just around where we're doing the pilot well program this year, and they have a real need for effective and reliable power. And then there's the local south SUMs or towns, which is Noyen and Gavantes SUM. So that's our first market, is really providing those users with electricity and selling that electricity. And as I mentioned, we've got the offtake agreement in place already. We're looking to put that pilot gas that's produced from the pilot well program towards the end of this year into reciprocating engines and commercialize the gas in that sense. But I guess that early market, the real value for us, I think, is in proof of concept, demonstrating that we can get the gas out of the ground and turn it into a commodity that's usable, and then we can demonstrate that to other end users in Mongolia. So the value there is proof of concept. The other value in that is supporting the local area who are, supporting us in terms of being able to execute this program. So it's good to have partners down there in the South Gobi, and the revenue factor is probably relatively small, but revenue cash is always good. But in the medium term and next year, all going well, we'll look to expand that production around the pilot well quotient program to meet that demand in that local area. So that's the early commercialization, which we're hopefully selling power by the end of the year. But then in the midterm cases, really other domestic opportunities in Mongolia, and there are a number of opportunities. I guess one that just comes to mind is that Rio Tinto Oyu Tolgoi project in the South Gobi, which has huge energy requirements, and they're required to source that power domestically, but currently it's brought in from China. So they're looking for a reliable domestically sourced power source to operate that mine, and that sort of power bill for them is in the order of $300 million US a year. So that's a big market in the South Gobi. And then there's also some other opportunities in Mongolia, which I probably won't go into in detail, but LNG and CNG and those markets as well. But that's the midterm case. And then the longer term case is getting into China. But realistically, we have to de-risk the project to a stage where we can attract a development partner to access that Chinese market. And that's probably, we'll see how we go, but in a couple of years.
Okay, further to that actually then, so just on the early stage of commercialization to power a local mining company, how could this play out? So for example, at what stage would the pumping would this start? And would it be from a certain flow rate?
Yeah, so we're quite confident on the flow rates, and so we're already in the early, in the process of designing and ordering the equipment for the reciprocating engines for the power plant. To be relatively small in the early stages, because our core business is exploration and development of the gas project. But yes, we want to get a relatively small scale power generation up by the end of the year is what we're targeting. And the flow rates, if we're talking 2.4 megawatt power station, we think we'll have easily the flow rates, probably by was it October? Maybe around October we'll have the flow rates required. And I think that what will dictate timing is really getting the equipment, the reciprocating engines on site and installed. I think that'll determine the timing of when we're selling power.
Thank you. So another one, is the acquisition of TPD's 33% interest a possibility? And if so, how could this potentially be funded?
That's an interesting one. I guess that's up to TPD as well. But I think there's advantages in bringing the project back 100%. I will say that I think we're working well together as partners. There's no issue there, but yeah, TPD have announced they're doing a strategic review into their 33% holding, and yeah, so if there's an opportunity there and it makes sense, I think we'd like to take it back to 100%.
Thanks,
How
Brendan.
it all plays out, I'm not sure quite yet, but we'll see.
Wonderful. So regarding the dewatering of the coal, what is the salt content of the water and can it be used for agriculture?
The water quality is not too bad. It's not quite drinking standard, but yeah, I think it's 1,000 parts per million, is it? Yeah, so it's reasonable. Where we're operating in the South Gobi, it's obviously a desert. All those operating coal mines have got a real need for water for wash plants, dust suppression, their camps. And so actually one of the agreements we've got in place with one of the local mine operators is instead of building large evaporation ponds, we're actually giving the water from the pilot oil program to them into their holding ponds, basically, and they'll use that water. So there's a real water deficit there, and so water is actually a commodity there, and those mining operators will take all the water we can produce happily. And so it will likely be used in recycled, basically, in the mining operations rather than agriculture. There's not a big agricultural industry in this area, but I think it's one of our focus really is to beneficially reuse that water the best way we can. So we'll definitely look at these opportunities, and I think we'll know a lot more in 3 months when we're producing water and we understand how much we've got, and we probably understand the water better. So yeah, we'll look at all opportunities to beneficially reuse that water. And I think that's a positive for the project rather than, yes, building evaporation ponds is, one, it's a cost and a high cost, and two, it's sort of wasting a precious resource there. So yeah, it's one of the good things about the project.
Brendan, so look, the project could potentially be very significant. However, does the company have plans to acquire further projects or ground in the region?
Not at the moment. I think we've got a great project. It's 8,500 square kilometres. It's big, it's prospective, and just based on my experience, working in Mongolia for 10 years as a geologist, I think it's the best ground in Mongolia. So at the moment, that's not a focus. We're really focused on just taking the project through the next development milestones.
Thanks, Brendan. Well, that's all we've got time for today. I want to thank you all for joining us for the TMK Energy Limited Investor Webinar. Should we have missed any of your questions, please feel free to reach out via the contact details, which can be found on the bottom of our ASX releases. But we look forward to hosting you again soon.
Thanks, everyone, for your interest.